Good day. Ira Epstein of Linn Associates with your SPDR ETF wrap-up, and this is for Tuesday, the 7th of July, 2020, and it is hot in Chicago. We are setting record temperatures for the first part of July already, and we're not due to go much under 90 for, I looked at 10-day forecast, unbelievable. Maybe it's as hot as the market, which today cooled off a little bit. You know, you had a big up day yesterday in the marketplace. Big Mondays often result in a correction on a Tuesday. Now, that could be a big decline on a Monday, getting a bounce, or a big rally, getting a pullback. It's a phenomenon. It's called Tuesday reversals. It's got a name. If you have a chartist friend, they might be able to explain it. I can certainly explain it. But that's what you have right here. And by the way, you know, I was talking about doing a webinar. My air conditioning in my home went out. I had to buy window units right now until the insurance companies, I got one of those home policies. I won't mention with who, but boy, they dragged their feet. The service company said, go with it. I think next time I get a policy, how quick before they replace? That could be an important event. But when we look at all this, we're getting a bit of a correction. And the reason I'm not doing the webinar, it's too hot for me to sit like that. Soon I'm uncomfortable, I'm going to hold one for this and for the futures markets. Foreign currency sort of mixed. Gold was up, but the futures are down tonight. Not very much, about $1.50 an ounce, but that's where they're at. So as we take a look at the market, we had what's called a key reversal day. A key reversal, different from an outside day down, is when you make the highest high of a move, or the lowest low, and you get a big reversal. You close under that day's, the current day's open. You close ideally under the previous day's low. It all fits in, and that's it. Whoop-de-doo. It's a pattern. It often is part and parcel of setting a trading top, not necessarily a trend difference. When I look at the market with the swing line, I have a pattern here that still is going to have a lower low. We've talked about that, and a higher high. Still haven't stepped away from that. The support in the market, theoretically, I would look for the 103, the 18-day average of closes, to be the supportive number. Again, we're not in a trend. The bias is up since you're over the 18-day average, so you're looking for where support might come in, and that's it. If the market were to go straight down through 131, you wouldn't have a downtrend. You'd have a higher high and lower low. So there's no pattern set up here right now. What is working is each time we're getting into this congestion of these Bollinger Bands, and what I teach is the first time you hit it, you step out and then try to come back in on pullbacks if other parts of your work is there. That's what's going on. I think the pros stepped out today. You'll say, stepped out, it keeps going higher, and I get it. But you're overbought as can be, and I think there's an opportunity on pullbacks hoping for a better chart price. It's that simple. When we come over, and let's see if I can get the next one to come up here, the SMH. What'd you do yesterday? Come on, what'd you do? You went right to the upper Bollinger Band, and I know it's going to break out, it's going to run away. Well, it didn't. The market pulled back today, as I expect, the first challenge of a Bollinger Band. What you play with these things is nothing works all the time in life. I wish it did, it doesn't. But you get high probabilities. And that's what it's all about, right? You're playing the probabilities. So when you see things that occur more times than not by a lot, those are the things I want to do. I do realize other elements can change, but that's why I have filters. I look at the slow stochastic for momentum. It's overbought. Overbought is not locked in bullish. It's overbought. You hit the upper band, I can see people taking some money off the table. Nobody says you can't buy back, but when you get those signals, you got to act. It gives you one chance often, and that's it. In the industrial sector, no trend. You've got an XLI, lower low, higher high, something else is happening. You're looking at these black bands, they're called Bollinger Bands, and it's got a top and a bottom. They're narrowing in. That's a function of the size of the range narrowing in and volatility coming out of the market. And it starts squeezing on price. And where's it driving it? Into the 18-day average where it's sitting right now. And trendless, good market maybe to avoid for a bit. Energy sector. This is the embedded reading. And when you have the embedded reading, I'm the first one that's going to tell you, I think the pros are aggressive on the short side on rallies. They're wrong and out if the red closes over 20, and until that occurs, I think they'll be aggressive into that 100-day or the 18 selling the market, looking for the Bollinger Band. So yesterday you got up to that number, the 100. I think they've been selling it for 3 days right here, and now I think they're starting to reap some rewards. We'll see what happens there. QQQ. We did not have an outside day down. We had a reversal day of a close, but you didn't take out the previous day. But what else? What's right in front of you? You hit the Bollinger Band, you were over it 2 days, and you slip right back. That's basically it. Are we overbought? Yeah, but could we embed? Well, both numbers at the close of business today, Tuesday, were over 80. They were over 80 on Monday. Come on, give me Thursday of last week. They were not Thursday. Tomorrow determines. Takes 3 days to get them, then I change my technique in the market, and I'll tell you, I think what they're buying, what's going on, things of that nature. Right here, I think people stepped out and we're waiting to see what happens. And no, I'm not bearish. And what I keep saying to you consistently is I think the market's just going to keep going there. In EFA, the emerging market, I'm just going to let that ring if that's okay. Higher lows, higher highs into the 200-day average yesterday in the upper Bollinger Band and pulled back. I don't think there's anything you want to do there. In GLD, we can see how the market's got the embedded reading. There it is, staring you in the face. This is what's going on. So I think the pros, if they can get the upper Bollinger Band, they'll step out of parts of their positions and aggressively buy them back on breaks until that red line closes under 80. In the gold miners, up to the upper Bollinger Band, a lot of resistance, nothing I see that you want to do there. I wouldn't buy this one the way I would the futures if they both dip first before taking out today's highs. TLT, well, the market's fighting at the 18-day average, and as it's doing it, the black bands are going sideways, you're overbought, no trend, lower and low, higher high, bye-bye, let somebody else trade that type of pattern. FXE, I am bullish. So I think that you're going to see new buying at 106.19. I think that the pros will throw in the towel if you get under 105.75. And if they get it, they'll look for the upper Bollinger Band where maybe that's where the resistance will be. You have momentum still up, the bias up, and the trend up is defined by the swing line. Next in the, that's it. That's the last one for this, yeah. I want to remind you, we write about the currencies, the metal markets, the financial markets. We're futures brokers. And if you think about it, they're all set up, and I'm talking TLT, we can go on and on, UNG, you think it's not natural gas? It is. USO, crude oil markets. So you want to know what the futures traders are looking, because that's based on that. A lot of these ETFs have to own these futures contracts in order to make their ETF work. So we cover these areas in great detail. If you haven't seen what our letter's about, you should look at it. And yes, you can sign up for just sections you like. So let's assume you don't want anything to do with the sugar markets and the cotton. Don't get information on it. All you do is go to our website, sign up for our info under free offers. We'll be happy to get it to you. I'm Ira Epstein. You have a good day. Talk to you tomorrow.